Investing in Tesla right now could be one of the best decisions you make in your life. In today's video, I'll be discussing exactly why, so stay tuned. Welcome to Trade Daily, where we break down all the best stock market news. Like and subscribe to keep up to date with the stock market. And I really hope you enjoy this video. There are more than a few good reasons why investors are drawn to these companies. In much of 2020 and 2021, a mention of Robinhood stocks may have conjured up images of meme stocks that were making insane and mostly short-lived gains in the market. Now, investors that use the Robinhood Market's online trading platform appear to be shifting their focus to more stable companies, likely as the broad market sell-off of the past year caused many investors to take a more cautious approach to where they'd put their remaining money. For investors looking for a few great companies to give further consideration to from the current list of most popular stocks among Robinhood users, look no further than Tesla, Amazon, and Apple. These three Robinhood stocks are worth consideration as buy and hold forever investments. There's no getting around the fact that Tesla's stock took a turn for the worst in 2022. The electric vehicle maker's share price has tumbled roughly 49% since the start of the year, as some investors have left the once red-hot EV market. And there are certainly some hurdles Tesla faces. Supply chain issues, rising material costs, and CEO Elon Musk's current focus on his newly acquired Twitter purchase are all affecting Tesla's near-term share price. But zoom out and you'll see a clearer picture of the company. Tesla is still the leading EV manufacturer in the world, and in the third quarter, ending September 30, the company's production continued chugging along, rising 42% year-over-year to 343,830 vehicles produced. Tesla is on track for a 2 million vehicle production run rate in 2023, which helped to take another step toward achieving Musk's goal of producing 20 million vehicles per year by 2030. Earnings are moving in the right direction as well, as non-GAAP earnings per share climbed 69% in the quarter to $1.05. Tesla's stock isn't cheap, with shares trading at about 55 times the company's earnings. But the current price is far less expensive than the stock's ratio of 304 this time last year. Investors will need to be patient with some of the EV industry's current volatility. But with Tesla already an electric vehicle leader, production continuing to ramp up, and the company expanding its profits, this EV stock still looks like a good long-term buy. Another popular stock with the Robinhood crowd is Amazon and its massive e-commerce business. Like many other stocks this year, Amazon's share price took a significant hit, sliding 43.8% in 2022. But don't let the short-term deep drop steer you away from the company's long-term opportunity. In addition to being a leading e-commerce juggernaut, the company's Amazon Web Services is a leading cloud computing platform. AWS brings the vast majority of Amazon's profits, and in the third quarter ending on September 30, the segment's operating income rose 10% year-over-year to $5.4 billion. And last but not least, Amazon also has a rapidly expanding advertising business that is now the third largest in the digital ad space, behind just Alphabet's Google and Meta platforms. Amazon's ad revenue spiked 25% year-over-year in the most recent quarter to $9.5 billion. Considering that the U.S. digital advertising market will reach $315 billion market by 2025, up from $240 billion this year, Amazon could continue to capture more revenue as it expands. Like Tesla, Amazon's price-to-earnings ratio of 8:6 isn't cheap, with the company's current lead in e-commerce and cloud computing. And its expanding advertising segment, there's still plenty of room for Amazon to grow. Apple may not be as exciting of an investment as Tesla or Amazon, but if you're looking for some stability in your portfolio, it's still a great investment. Sure, Apple's stock slid a bit over the past year. It's down 1.3% over the past 12 months, but it hasn't experienced the large 15.6% decline of the S&P 500 over the same timeframe. The lack of volatility may be what initially draws some Robinhood investors to Apple's stock, but it's the company's consistent growth that keeps them there. In the company's fourth quarter, Apple's sales increased 8% from the year-ago quarter to $90.1 billion, and earnings increased 4% to $1.29 per share. Strong demand for Apple's iPhone gave the company's results a boost, with the segment's sales increasing 10% from the year-ago quarter, $42.6 billion. And there could be more iPhone growth in the coming years as more consumers switch to 5G phones. Apple already holds 29% of the global 5G smartphone market right now, as this space grows into a nearly $668 billion market by 2030. With Apple's shares trading at just 24 times the company's earnings, down from 27 times earnings at this time last year, investors can buy Apple stock at a discount right now. Tech and EV stocks are especially volatile right now. So if you buy these stocks, you're likely to see some share price swings in the near term. But being a long-term investor means holding stocks for 5 years or longer to let them grow and ride out the short-term volatility. Tesla's valuation may mute returns for the short term, but the business still has a huge runway. It's not often that the stock of a business that is growing at a 50% annual rate itself drops by 50% in less than a year, but that's exactly where Tesla and its stock are right now. The stock got hit by several different factors, resulting in it nearly being cut in half since the start of the year. But even through challenges that directly impacted manufacturing at the electric vehicle leader, Tesla managed to keep growing production volumes and revenue at a 50% annual rate so far in 2022. That discrepancy between the direction of the stock versus the business makes Tesla a potential investment worth researching further right now. It's pretty clear how and why Tesla's business is growing at such a fast pace. Market demand for EV is global, and Tesla has the first-mover advantage. It is generating massive amounts of cash and reinvesting it to further grow the business. Tesla opened 2 new plants this year and grew the annual production capacity of its factory in Shanghai, China, to more than 1 million vehicles. Even after those growth investments, Tesla has generated more than $6 billion in free cash flow in the first 9 months of 2022. As of the end of the third quarter, it had more than $21 billion in cash and marketable securities. Even with all that growth, there are understandable reasons why the stock is down by about 50% year to date. Valuation has long been one of the biggest bear arguments against owning Tesla shares. There was plenty of growth already built into the stock price heading into 2022. Earnings soared over the last 2 years as the business grew, but the stock remains expensive. Even with that growth, its trailing 12-month price-to-earnings ratio remains lofty at over 55. That's too expensive for many investors, even those who believe net income will continue to grow, especially in an uncertain economic environment. Some have sold off because of that. Other factors contributed to the stock's decline too. CEO Elon Musk sold about $19 billion worth of his Tesla stock this year related to his acquisition of Twitter. Some shareholders also may have fled the stock because they're wondering how much Musk's new role at Twitter will distract him from Tesla's business. Investors considering buying shares now need to think there are catalysts to drive Tesla shares higher from here. For example, Tesla will begin pulling in revenue from its semi-truck beginning on Deck 1 when it makes its first delivery. The Cybertruck is also scheduled to begin production next year. In addition to EV, Tesla's energy business continues to grow. Revenue from its energy generation and storage segment jumped 39% year over year in the third quarter. That represented 5% of total revenue, and the company says demand there continues to outpace supply. ARK Investment, led by CEO Cathie predicts Tesla shares will be worth $1,533. We break down every detail of the bold proclamation in this video here.
We've come to the end of the video. I'd like to give a huge shout out to anyone who's made it this far. I hope you enjoyed the video. I'd also like to make it clear that this is a news and entertainment video, not investment advice. You should always do your own research and speak to a financial advisor before making any investments. Thank you all so much for your support. Don't forget to like and subscribe for the chance to win up to $20,000 in Amazon gift cards, and we'll see you in the next video. If you want more crazy trade news, how about this video we did?